from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today, I'm very pleased to do something. It's been a while I didn't do having two guests on the show. So I have with me Barbara Biro and I have Paul Dowding. So Barbara and Paul, the way I like to do it is I keep it to my guests to introduce themselves. Barbara, I would start with you, but just I'm going to give a kind of a teaser to the audience. The topic we're going to discuss today is really something I'm passionate about. So we're going to talk about AI, we're going to talk about blockchain. So Barbara, I will start with you, a little bit about you, your background, and then we'll pass it to Paul.
Sure. Thank you, Mehmet. Welcome, everybody. My name is, as you said, Barbara Biro, and I have been living and working here in Dubai in the Middle East for nearly 2 decades. And I was working with global banks, local banks as a head of digital, and I have economist background and master's in data science and IT as well. So pretty much most of the components of the successful modern technology-driven economy. And I also won a Global Finance Award a few years ago. But over to you, Paul. More or less, this is about me.
Thank you, Barbara.
Thank you, Mehmet, for inviting us to this. I'm Paul Dowding. I've had a long-term career in institutional financial operations and infrastructure, dealing with transactions around the world for international investments. I've worked in banks, in brokers, in fund managers, and then been trying to make the industry more efficient and transparent, and saw the advent of blockchain technology as a means to actually do that. And I've been involved with a startup where we've developed a differentiating blockchain protocol to really help the industry solve its problems, and looking forward to the conversation.
That's great. And thank you both for being with me on the show today. So as I was saying, we're living in a, different era now, and everyone is talking about it. But I want to hear your opinion on one topic. So we're talking about the AI age, right? And let's, start discussing why, the current systems are failing in the age of AI. So Barbara, from your perspective, and you work with the financial institutions, and, you manage also a lot of systems. So what do you think is broken? Why we are still failing?
Well, so there are several reasons behind this, and since history is the basis of macroeconomics. So every single empire and era could last so far, not so much longer than 100 years. So we are kind of breaching the 100 years era of our current empire, which is reigned by the United States, where Paul is from, and not originally, sorry. But first of all, the monetary systems are kind of failing to fulfill the requirements of the crowd, of the public, of the people, or the needs of the people. However, we have never been richer than today before. But behind that, there is a huge accumulated debt, what the governments collected, and a huge forces are kind of preparing another inflation and debasement of currencies. So besides all these economic problems, then there are million other problems which are just kind of blowing this bubble even bigger. Geopolitical uncertainty, pandemics, and different other kind of food insecurity, for example, and many other pieces of all this puzzle. What can accelerate the kind of upcoming if so-called crisis. I don't want to act like an owl here, but really, so we are at the end of a kind of historical time frame when empires could hold up in this current economy and monetary systems, the centralized systems, and on the other hand, especially because of the faults of the monetary systems and economies and centralized systems, is that the trust has been broken in the banks and in the centralized other systems. So people started to notice that the money, what is really behind the money, is more or less not much, and cannot even cover the assets or the deposits or the cash value what people are holding. So this trust is significantly broken because fintechs started to enable other type of solutions, not just in lending and payments, but many other services came up which are giving much better, much faster, much cheaper, much more convenient, more user-friendly solutions than the traditional legacy organizations could. So this is a kind of very complex problem here, what we are facing. So therefore, the decentralized marketplaces or communities and platforms became very, very popular. And now today, even after the re-election of Donald Trump, we can see that even the American government to invest or manage some assets, very, very serious amount of assets in the decentralized market. I'm not sure if that's not the nightmare of Satoshi Nakamoto at this point of time, but they are kind of preparing to trying to set foot in that area, because governments don't really know how CBDCs could work. The actually released and live CBDCs, which are the crypto version of the government money, is failing. So the adoption rates are really, really low. In Nigeria, the e-Naira, it was a complete failure. In the Bahamas, the $10 also was a complete failure. In China, still it's there, but because it's a communist country, so the government can force people to whatever, but still the adoption rate is around 1%. So when you want to go against human nature totally, then somewhere, somehow, the people start resisting. So still, we have the decentralized market, the crypto markets, and other blockchain communities, where really the freedom, the independence, let's look at it in a good way, because many people are completely scared about crypto and blockchain and considering it as a hush-hush black market, terrorists, and I don't know, and money laundry place, because of certain blockchains still supporting anonymity. But it's more like Paul's area. However, I'm also quite passionate and certified about the problem. But I think that if we talk about it more, how blockchain can support and solve the today problem, because there are many speculations. A little bit I ran ahead, but because I'm already talking about the blockchain, but why we certainly need blockchain besides all these problems what we have in the economy. First of all, we have a huge amount of cybercrime, growing nearly 100% year on year. Legacy systems with all these overgrown and complex and overlayered legacy infrastructure, wherever there is a friction and the data goes out from one system to another, it's already vulnerable. Governments and organizations are not proactively trying to stop these opportunities where cyber criminals can get in. They are reactively trying to run behind them. And because now we have AI, AI is a kind of so powerful tool that is not just able to take away our jobs, and it's taking away our jobs. And besides, it's creating some new, but not in that pace. It's creating new jobs. How much it's taking away the same with the same pace it's taking away jobs. So it's kind of we have to be able to ensure that people are able to still stay alive, survive, generate universal, if not universal income, at least some kind of income, but definitely not having some kind of income which is even in the best performing economy, getting devaluated, inflated, minimum 7 to 11% every year. So the current fiat money is not the solution in the age of AI, when we need to kind of ensure our still well-being and lifestyle and survival and income, that these geopolitical uncertainties, economical failures, changes of empires and eras. Europe is in trouble. The dollar is shaking. Million other Middle Eastern tension is there. So in this uncertain age, we need some kind of certainty, if possible. And how can we solve that? So we are not here today to speculate about the AI and the potential outcome of the future in 2, 3, 5, 10, 20 years. Others can do that a lot in these media, but we are here today to fix the present. So what kind of infrastructural foundation this future potential needs to create a certain, a stable, thriving, and potentially scalable future-proof economy. And that's what kind of Paul created, and Paul and Paul's colleagues and team has already created, which we kind of put together with my other concepts to make it a working model for a parallel or a stable new economy.
Well, a lot of thought-provoking points that I think we're gonna talk about. But before to before we dive in, like, I want to hear from Paul from maybe technical point of view, like why in European technologies fell short in addressing the challenges. Some of them, like I know Barbara highlighted on, and and she was stressing on the need of this decentralization, and of course the blockchain achieved this. So, but what's your technical point of view, I would say, Paul?
Well, I mean, it's interesting. Barbara was sort of going through some history. If you look at the history of, the implementation of IT, information technology in the 70s and 80s, what happened is obviously, if you look at all the different markets, all the different products, they all had their own infrastructures because they had their own expertise. You're an equities guy, you're a fixed income guy, you're in derivatives. So the technology tended to be customized to each of the silos. So that worked great for each of the silos, but when you come to do interoperability between these infrastructures or trying to record data or extract data from, you're dealing with all these different infrastructures. And really, outside of its decentralized process with a blockchain, it's really a consistent format to record transactions. So it's like a Rosetta Stone. It can talk, it's sort of asset and life cycle agnostic, which suddenly allows these technologies to talk to each other. And the analogy I make is if you think about the internet, prior to the internet, we were always going through a centralized phone company, and to communicate, you had to go one to one. Any email system was customized and proprietary, so you could send an email inside your company, but it couldn't go outside or do anything. The internet made a consistent protocol to communicate, and suddenly it's just a matter of where's the start point, end point, can I communicate? The real potential of the blockchain and decentralized is to commoditize that transaction linkages. And I do believe in a transformation. What's interesting, and the thing I say is, if you have gone to those phone companies in the mid-90s and said, in 20 years' time, 25 years' time, your competition is going to be that nascent online bookseller called Amazon and that DVD delivery service called Netflix, that has said, my competition, how? All right, well, communication became commoditized and suddenly content became king. And so you've now got this street. What is your content? And so Amazon going into content generation, Netflix going into streaming, they became the telephone companies bought the cable companies, and they bought streaming services. That became a new market. And I think what's going to happen with the financial services is we're going to commoditize transactions, and companies with natural networks, which are, social media or Google and search engines, also the big retail, Walmarts, the big phone companies have natural networks, and with a banking and brokerage licenses, they now have the potential in the future to provide all these services. So I think there's going to be a big translation. It's interesting, but like you said, the question really is we've got siloed infrastructure, and the point of AI is to aggregate data, structure it, and then interrogate it. Well, to get it from multiple sources is tough, but once it's in a consistent format, it makes it much easier.
Just one thing. It's good that you said, Paul, about Netflix and Amazon and internet and all this, since now everybody is betting on Bitcoin, obviously, and because of a lot of good reasons. But the thing is that just like the internet when it was invented in 1972, nothing is perfect at first.
Yeah.
So Bitcoin was the very first blockchain infrastructure network and system. However, it's undergone a lot of new improvements and developments, and now it's faster and using less energy, and many other level 2 solutions are built on it. But still, it's not perfect. And since it's already a not new technology per se, because it's been out there since 2008. So it's kind of, we had enough time to study it, understand it, and make it better. Just like Paul and we did. And what else is wrong with the blockchain as we know it today? That we cannot buy bread and butter with it, right? I mean, on a blockchain. So the ecosystem is missing, right?
Mhm.
That there is no ecosystem involved. If there was, even Donald Trump said that, one day I'm going to buy hamburger with Bitcoin. Yeah, I bet, but maybe it's not going to be Bitcoin, or maybe it's going to be Bitcoin on another network, which is capable of catering to all this.
Yep.
Yeah.
Right.
No, I agree.
So the theme, like from what Paul just mentioned and what you were just saying, Barbara. So it seems it's kind of philosophical, and I'm kind of a philosophical here, because humans by nature, they don't like change, right? So, and they are skeptical about any new technology, and I've seen it like many times, and people, they say, okay, how you can prove it? I'm sure like Paul have seen it more than me, but I mean, to me, it's like this kind of dilemma, and this is why I'm now, rereading again the innovator's dilemma, because people, they don't figure out, why this happened. So now, you're talking about blockchain, and if you really think about it, so we kind of, as humans, we go into this loop, and people maybe they don't remember that actually computing when it started, it was kind of a centralized, and then it became decentralized, and now later on with the cloud, so trying to put everything again, and we're just using our browsers as terminals, the same way what we were doing this before. And I think it's just a normal, I would say, cycle that we need to pass by. But the ones who are the early adopters, I think they are the winners all the time. But I want to bring maybe with Paul first, and then I'm gonna come back to you, Barbara, about the misconception. And you touched base, Barbara, a little bit. So the misconception is, um, and I discussed with a lot of these folks who are in blockchain for a long time and in Web3 and all this. Of course, everyone explained to me different way, but I think, and I need here some help from you both. So when we say blockchain, of course, the first thing that comes to mind is crypto. And I am, repeating again and again, guys, crypto is different, is one use case of blockchain, right? So why do you think still people, have this misconception? I would start with you, Paul, and
Yeah.
then Barbara, I would hand over to you.
But obviously, yeah, a lot of the initial publicity of blockchain came because it's the ledger that's underlying Bitcoin, and the crypto and DeFi worlds have been successful in terms of launching various different coins or different use cases, and people are making money. Exchanges are making money. The protocols. However, although they've got a lot of headlines and they're making money, they are really tiny. And although I hate to say it, but they measure their total value in billions, whereas the financial markets measure their size in hundreds of trillions. And the FX markets today are $5 to $10 trillion a day. So while the DeFi crypto has shown the innovation, it's really still small scale. But the thing is the blockchain is really the idea of a decentralized ledger, and the concept, again, similar to the internet with the phone companies, is that transactions are usually managed through a central authority. Even the banks, although you go to an intermediary bank, the bank will go through a clearinghouse or a central bank to move money between the banks. In a securities market, you have a clearinghouse or depository to move it. Now, the idea, what Bitcoin showed, revolutionized, is that you could each have a copy of the ledger. So you're checking your copy, your trusted copy of the ledger, to validate that the other party has the assets to transfer or you can transact. So it's really, that's the potential. There's other issues in terms of how that's done at an enterprise scale, but I can get into that later. But really, the key thing is the decentralized ledger that allows peer-to-peer or B2B, business-to-business transactions without that central intermediary. So there's a great efficiency there. You're talking to who you want to transact. Think of the internet. I communicate with who I want to communicate. It's a network of neutral. I go through an intermediary, an internet service provider, but there's no central authority connecting us. So imagine you can get on and transact with who you want to without that central authority. That's the concept of a blockchain or distributed ledger.
Right. Barbara, like you mentioned a couple of use cases why, the first thing comes to their mind is also like, I remember, I think it was 2016, 17, 18, that era also, when the ICOs, the initial coin offerings were like, and a lot of scams happened.
Yeah.
So I think this stayed with people. But what other like misconception have you seen, about blockchain in financial system, especially for banks? Because I want you to highlight this because you work at, in that sector. So all the big bankers around the world, they were saying this will not, happen. No, they were saying all the bad things, I would say. And funny enough, later on, like we start to see, for example, an ETF for blockchain, which is like the Bitcoin ETFs and the Ethereum ETFs and so on. So what happened before and why they changed later?
So it's happening, and it will happen. So the banks should not feel very much safe and secure and um, trust that it's going to go away, because it won't. So the misconceptions and the negative news and experiences around the blockchain and crypto and Bitcoin and every other is because at the beginning, since no system is perfect at first, as we said. At the beginning, when blockchain was released in 2008, and the Bitcoin came to the public sector to be available, it came from a game. So, for those who don't know, this Bitcoin concept was created for an online game where the gamers were able to purchase stuff for their avatar. I don't know, I never played that game, but it was a game currency. And because it worked really well, the algorithm was quite a new revolution in the world in this sense. They released it with certain changes, and it was what it was. So and it had certain gaps which enabled indecent activities at the same time, because since it was coming from a game, what do you need to identify yourself in a game? You have an avatar name. You don't need KYC like banks need KYC at that particular way, because you had some login credentials, and you had your avatar name, and you had some digital footprints to identify yourself with, and that's it. And that was enough. That worked well for a certain community, the gamer community. But as it is, it's not working really well for the real world, because if I log in with an avatar name, I can be a criminal, I can be a money launderer, I can be a human trafficker or whoever. Nobody's going to find out, right? So that's where the misconceptions are coming from at one point. So, but the technology as such, it's such a perfectly planned design technology that the block itself, what includes the details of the transaction, can be programmed however I want it to be programmed. So if I want KYC to be in it, I program KYC in it. And guess what? If I have a blockchain infrastructure and I have KYC programmed in the block, I don't need anymore this bullshit onboarding process what the banks currently are using. That scan your ID, or I verify I connected with an API to a authority which is verifying the ID, or not. Just scan your ID, fill the questionnaire. I don't know a million things. At least there are 50, 60, 70 points of checklist what you have to comply with if you want to onboard a new customer for a bank. But if you have a blockchain, everything is in the block. So if I have already a money anywhere in this infrastructure, which is recorded in a block, the KYC becomes, send me 1 dirham. Poof, I have your KYC. I don't need you to scan your ID and blink and turn your head. Give me your fingerprint, give me your friend's name, friend's address, nothing. Salary, so everything is there in the block. So I saved cost, I saved time, I didn't annoy the customer. And at the same time, I'm not just able to onboard this customer, I'm able to tell them immediately, oh, you are eligible for this much personal loan. Do you want it? You are eligible for up to this much mortgage, auto loan, blah, blah, blah. So I can do everything in a second in a very safe, very secure infrastructure. The data is not hackable. Nobody can steal my identity through this system while I'm interacting, because the blockchain can provide all this safety, what the legacy infrastructures cannot. So that's what you mentioned, the ICO related. So there was this, which coin was it? FX something. I forgot the name of the coin. What was the last big scandal when a coin was released, and then the big hype and sales happened, and then sometime later, the creator of the infrastructure just ran away with it.
You
What
were
was
saying,
that?
I think it's FTX. It wasn't a coin.
Was
It was,
it-
it was an exchange. But
Yeah, but what
doesn't tell you about it.
thing is relying in the programming. So that's the key. So you can program this system in a way that you can steal the money, but today
Right.
already you can audit. So you cannot go live with an infrastructure without legal review and auditing and audit review.
Right.
So
I have a point.
yeah,
I have a point of view here, Barbara, on this. So there are two things that I believe, is complicating the whole thing. And I'm not an economist. I'm not a someone who studied finance, but I believe, from technology perspective, the way I see it, and I understand business. So the main issue here is we want to decentralize because we want to give, the ability to people to interact, send money without an intermediary, which is fine. But at the same time, we need to make sure that it's kind of compliant and it's regulated, right? At the same time, which is here the funniest thing ever. So when the blockchain, I mean, the Bitcoin started, the main reason was, as to your point. So me, I can send to Barbara or Paul, right? And I don't need anyone. The thing is, we needed to put this price tag on this asset, right? And funny enough, this price tag is nothing else than the USD dollar. And guess what? Like, we invented something called the tether ledger, which is the USDT, or something, the other one with the USDC. And then all the time we measure the Bitcoin, the Ethereums, and everything by the US dollar. And people come in and go out again using the US dollar. And guess what? The US dollar is centralized by the government of the US. So I think until we manage to, I'm not saying like de-attach the value of Bitcoin, but any cryptocurrency, and I think this is what we can discuss later,
Yeah.
if we don't manage to attach a value other than the fiat currencies, I think we have an issue here because, and you just mentioned something, Barbara, before, and maybe I'm gonna ask Paul this question. So why? And you said like Donald Trump said he buying a burger with Bitcoin. Of course, like there are maybe some places that they accept, but what is it like? Because not scalable? Is it because we don't have the capacity? So what's stopping us today from, leveraging the blockchain full scale?
Yeah, it's interesting because that's actually when I was the Alpha S4 company was spun out of a boutique consultancy in the financial services, and we were looking at blockchain in 2015, which was an auspicious year because Ethereum, digital assets, Hyperledger, R3 Corda, they all started their enterprise systems trying to leverage what was blockchain technology. The problem with the decentralized distributed ledger, and this is the problem that really Bitcoin solved, was, okay, I'm going to trust my copy of the ledger, but I can say I'm going to spend the money with you, and I can show you I've got an asset, but simultaneously I could show it to Barbara. And the problem is if there's a latency between me showing you I've got it and the actual settlement, and that's what's known as the double spend. And what Bitcoin did was to say, no, we have a competition to validate the next update to the ledger such that it would reject a double spend. The problem is it does solve the double spend problem because it doesn't allow it to occur. The problem is it still allows me to present my Bitcoin to two people, and then it will sort it out later arbitrarily, right? The problem is so that's what happens. In Bitcoin, there's this mathematical competition to win the next block. What was popular for a while was what was called consensus algorithms, where people would vote to agree the next block. And now there's independent validators. Unfortunately, those solutions either get slower with scale or they have a finite capacity. I won't go into the technicalities, but Bitcoin can only process 1.5 to 3 transactions per second. Any more than that, and it starts to have a backlog. Ethereum can do 15 to 30 transactions per second. In the financial services, you're talking tens of thousands per second. So you've got that capacity constraint. The problem with the voting or the validation is it doesn't scale. And if you create what they call shards or clusters, you're just adding capacity in different channels. It's not really scaling the capacity. And this is what people have run into in terms of just the performance. The other big thing that's missing, and Barbara brought up FTX. FTX was not a failure of crypto, and it wasn't a failure of blockchain. It was a failure of accounting. They ran their accounting as a single entry accounting on a spreadsheet, and they had no clue what they were doing with their money, right? Problem with current blockchains is they're single entry ledgers as well. They're really not financial ledgers. They don't have accounting. And believe it or not, as a technology of the future, what they don't have is a view of the future. Think about your company, you're looking at your income statement and balance sheet. Yes, there's the assets that you hold long, money on hand, inventory, materials, machines, but a lot of your balance sheet is all your future dated payables and receivables. Who owes you money? What money do you owe other people? There's no way on the current blockchain designs to record a future dated payable receivable correctly in accounting journals. And that's what we recognize. We saw the huge potential of blockchain, but then said, hold on a second, while it's great to have this peer-to-peer and much more efficient service and they haven't pulled the controls to the edge. So we found a way to synchronize the ledger without those validators based on transaction data alone at the edge. And that allowed us to be linearly scalable and high capacity. But as a ledger, we also wanted to record proper accounting journals. You're ultimately going to be a sub-ledger. So that functionality, and then believe it or not, you have transacting periods which allow us to record future data payable receivables. So that's why in 10 years, nearly 10 years, these enterprise blockchains haven't really gone beyond very limited use cases or pilots or proof of concepts. And I was saying earlier, you've got all the innovation and money being made in DeFi and crypto, but they're jealously looking at the hundreds of trillions of assets that they think they can command in the real financial services. And the financial services is looking at the technology, but struggling how to really implement it. And that's, those are the limitations that we see. And we tried, rather than force fitting a protocol to a use case, we said, what are the requirements of that use case and how do we design a protocol to meet them?
Okay, Barbara, what would happen if we don't address these challenges? Because you were talking about that, the 100-year system that is failing us.
Yeah.
So what would be the consequences?
Now we are ready to address all these challenges. So what Paul just said, that the technology now, what they created is so advanced and that it can cover and it can solve all these kind of technical, administrational, accounting, and performance-related challenges. However, what you said that why we are still measuring the cryptocurrencies to the dollar. However, let me tell you one thing, that the dollar-pegged cryptocurrencies are failing. So, because those are pegged to the dollar, and the dollar is kind of not providing that kind of stable growth of assets or even keeping the value of our assets, then the other cryptocurrencies can or could. Like, for example, today there is no any kind of asset and investment, which in general, publicly accessible, which can outperform crypto and technology. These two are unbeatable investment opportunities today if anyone can access. And the cryptocurrencies are those which the public can access. There are many fantastic news and posts and the media about how these rich countries in the world are announcing that, they are now accessing and investing trillions or billions of dollars at least in AI or cloud technology, this technology, that technology. Great, but then how will the public benefit out of it? Nobody thought this through from those who are investing in this technology, because they want to invest it in it now and take the money tomorrow. And then it's the loser's market after all, right? So then all this AI, what we are bringing here, who are we going to sell it to? Okay, everybody, let's say, will buy AI technology sooner or later, and they already started to buy it. But then what will happen with the people who are going to be dismissed and obsolete because of all these AI technology? Because let's say in these Middle Eastern countries, the expat population can stay in the country as long as they are having a job. So if they are dismissed and we have all this AI and everything is automated and all the expat population who lost their job left, who's going to stay here to, eat and make the economy work and spend money and consume? Because we are a consumer world. So we are built on consumption. That's why there are hyper production to sell more and more food and more things what we don't really need. Who's going to do that? It's not really thought through from the entire macroeconomic perspective, and scalability and future world idea is not there at all. We just reached the idea that we have to invest in AI and technology. Wow, okay, great. But then what next? So for these things, because as long as we don't have another economy, full economy, not a financial infrastructure alone, meaning that we have a financial infrastructure, an administrative infrastructure, and an ecosystem where everybody can buy whatever they need for that particular money, what the infrastructure accepts, right? So let's say it is Bitcoin. So it's not possibly not gonna be Bitcoin because of these performance and accounting and other details which Paul just described. But let's say we are going to have an infrastructure which we already have. So we have this infrastructure, what could manage an entire new economy in a way that the money is not going to lose its value. Nobody, and what you said, Mehmet, just a thing that you said, that we want to decentralize this infrastructure and our financial systems because we don't want intermediaries in between to make it expensive and slow, right? That's not just the reason. We don't want a central authority to figure out what we can spend our money on and how much our money worth, right? So these are the two major trust issues in the central government. That, okay, today I'm fine. I earn X amount of money monthly, and today it's enough for me to live on. But maybe tomorrow it won't, right? And it's not up to me, and it's not up to the economy. Ever since the Bretton Woods system in 1971 by Nixon was demolished and the fiat currency system came alive, at that time in the 70s, the entire dollar amount which was out in the world was about $48 trillion or something like that. Today, we have 6,000 trillion amount of currency out, and nothing is behind it. Nothing really. So we cannot even say anymore that the crypto is a hoax because there is value behind it. And it's just moving because how the mood of the investors are moving. So today I want to buy crypto because I believe in it. Tomorrow I don't believe in it. I'm not going to buy crypto. And that's somewhat the truth. But this is all the same about the fiat currency, with the bitterish twist that it's not just based on the mood of the market.
Right.
It's some kind of background political speculation and conspiracy, what's not completely out of our hands, right? So that's what we need to establish the future, a better future, based on properly working, legitimate, and monitored and controlled decentralized systems where we do have a say on what's going to happen. And we need to involve the ecosystem around it to be able to cut the fiat currency off, cut the dollar sign off the cryptocurrencies, because I don't care anymore, because I know the value of my cryptocurrency based on what I can buy for it.
Right. So, Paul, many points that Barbara mentioned, but I want to come back to the AI, and if you can, like, just tell me about, why you think AI plus blockchain is the ultimate one, and maybe kind of a call to action, and then Barbara, I'm gonna come to you, and then we would wrap it up.
I often say, rather than artificial intelligence, I say algorithmic inference, which is really the key of what you're creating data. And the key thing to learning in AI is structuring the data, and then you're interpreting it. So blockchain has a means, and I've talked about this consistent protocol of transaction. It has a consistent way to structure data. So therefore, and how, what you want to add to it in terms of their variables or other information, you're already giving the AI a head start. You've also got control over what is actually being recorded. The other thing that a blockchain can do is actually track what the AI bot is learning. So you've got like an auditable history. So therefore you can provably make sure that it doesn't have bias, it doesn't have false information. You've seen a lot of these AI bots wander down rabbit holes when they've learned the wrong things. So you want to be able to control it, but you also want to be able to, prove that what it's available to. But it becomes a self sort of perpetuating loop. If you think about it, you've created transactions and you've created data in a consistent format that now the AI can interpret for compliance, for risk, for credit, for strategy, and then feed back into the transactions. And again, that's where we've got a lot of people involved in investment strategies and other things. This could become a lot simpler. And again, the tools and what people want to use become the choice of the consumer, and they're obviously a lot cheaper and easier to use. And that's the sort of combining of the two technologies.
Right. Barbara, do you want to add something on this point?
So since the daily size of data what we produce is now over 2 terabytes per day, it's impossible to oversee and manage these kind of systems without AI, and also enhancing the operation and enhancing the experience of these systems which work with these huge data sizes is impossible. So and definitely an AI controller or an AI monitoring system is also kind of if we launch it on a legitimate way and after auditing and everything, it's not biased anymore. So it's a kind of independent party who's managing all this. So we definitely need AI, and in the AI age as well. At the same time, the decentralized blockchain environment is the only possible place where people can create for themselves and manage for themselves independent income, universal income, and generate assets for the future.
Is it coming, Barbara? Sorry, I need to ask you this before. I don't want to miss this question. Is the universal income something that's going to happen?
It has to happen. Otherwise, in the AI age, if it doesn't happen, either the population of the Earth is going to reduce to those 20, 30 people who's going to work with the AI, or we have to find a way to generate income other than from everyday salaries, right?
Yeah.
I have a different opinion, but that's okay.
I would love to hear it. I would love to hear it, Paul.
Yeah, I think, the famous guy Ludd, who didn't want to deal with automation of weaving looms, and that's why you call anybody who's not interested in technology a Luddite. the point is that yes, it did make weavers out of business, but it created a better way to make clothes, which made them cheaper. So therefore, there was more purchasers. You then got more distribution of clothes. You got more shops to sell the clothes. So, Barbara, you're right. The technology is definitely going to make roles redundant, and it's very hard to speculate. Like, can you imagine trying to explain the modern day supply chain to Mr. Ludd and saying, "Don't worry about the future," So, but I think so. As much as the technology eliminates roles, it's going to create different kind of roles, and that's where the economy can still generate the.
I would be in the middle between you both, because what I believe.
We're kind of in the middle of between myself and Paul.
Yeah, no. So my point of view, to Paul's point, so technology, again, the nicest thing about humanity is that we were able to record. So before, like, because it was written, people were doubting it. But once we started to have the audio recordings and video recordings, so we have a proof. So what we have seen is technology always disrupt. It eliminates jobs 100%, but it creates a new jobs. So this is also 100%. Yet, to your point, Barbara, what I've seen with the AI is that we don't have necessarily to work the same way we think about the word work today. The job as going to office, sitting behind a laptop and doing repetitive tasks, this is gonna go. I feel very sorry for population that still think like, okay, I'm talking about the Gen Zs, that we're gonna go to an office now and we're gonna have this corporate job, and we're gonna like. I said, guys, you need to be thinking about the job of the future now, because AI is changing the whole thing today. So I would be in the middle between you and Paul of this. Now, as we are approaching to the end, so Barbara and Paul, like, what are like final call to actions I would say you want to share? So Paul, I will start with you, and then I will move to Barbara.
I think what I'd say is that the technology is there to be transformed, but it has to be designed to meet the requirements of the use cases. You can't just take off the shelf technology and try and make it work, and that's the mistake. As much as I do believe Barbara's right, there'll be a massive transformation. Since the Renaissance, legally we are required to reflect everything in accounting terminology. And it's very hard to avoid. It's going to be a long time before we find another way of bookkeeping. And accounting is the language of transactions, and that's the key to the solution.
Barbara?
Yeah, I would say that we must let go the old. We must let go because the new is already here. So we still don't know how many new jobs AI is going to create or take away, since we reach singularity at this point, and we are just speculating. So I'm quite flexible at that part. So I would love to believe that we are still going to find many ways of work and job. But the thing is that nothing is going to work very soon. It's already not working in the old ways. The banking systems are not suitable to survive. The infrastructures are not suitable. I mean, from the basic economic foundational systems I'm talking about here. So I'm not an expert at electric cars and other stuff. So let's say that the basic foundations of our economy today is broken. And it's broken because it was built this way, and we already built the new one. So let's start thinking about how to use that, because I teach AI, I teach digital transformation, I teach DeFi to banks and financial institutions currently at some time. And this is what you said, Mehmet, just about the same, that people still think that they still need to sit in the office and work on something, which is creating some reports or data or some repetitive manual task. And when I take away from them that part of the task, and I ask them then, okay, so this is your data dashboard. What are you going to generate insights about?
Yeah.
Okay, so we have to start thinking creatively and try to build something else, because we are never going to get out of this vicious cycle of 100 years of empires dying one after another if we are not fixing the problems of today, right?
Yeah, yeah, absolutely. Uh, Barbara and Paul, like really, I think what should we do? We should do a part two very soon, because this is a very, and I like such discussions where, everyone comes with their own thoughts and, their perspective of viewing, different, I would say, effects of, these emerging technologies, especially which are like, I was on a podcast today myself, and they asked me, what are the two main technologies you think like they are on the rise? I mean, they're going to continue. I said, AI is of course first and blockchain second, and this, marriage between the both. So I want to thank you both for this discussion. And, I would encourage people to get in touch. And, Barbara, I know you are active also on LinkedIn, and I'm going to put your bio and the website. Paul, same for you also as well. So people to get in touch with you. And I promise the audience that, we're going to have another discussion. And for now, I would love to thank the audience for tuning in today. And I please advise you to subscribe and share with your friends and colleagues. And also, like, if you have any comments or suggestions, please send them to me. Thank you very much for tuning in, and we'll meet again very soon. Thank you. Bye-bye.
Thank you for letting us be here.
Hit that subscribe button, share the show with your tech-savvy friends and fellow entrepreneurs, and leave us a review on your favorite podcast app. Your support means the world to us.